Welcome back to Investing Talk Podcast.
Today we're looking at DJT, the stock for Trump Media and Technology Group. The big question is, with all the recent news and volatility, is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get right into the analysis of the source material. We have to start by framing the central thesis, really.
Okay.
DJT is rapidly expanding beyond being just a simple social media platform.
Right.
The strategic pivot that seems to be truly driving the stock right now is this massive lean into financial technology, fintech, and digital assets.
Okay, fintech and digital assets.
Yeah, and this fundamentally changes the company's risk profile and, its upside potential.
That shift really is the most compelling story, the narrative supporting the stock's current price, isn't it?
It seems to be.
And the most immediate and, I guess, surprising catalyst was the launch of Truth Predict. That was October 28th. And this isn't just like a new feature. The sources describe it as the world's first native prediction market embedded directly into a social platform, Truth Social.
And the detail that turns this from just, a feature into a real strategic move is that exclusive partnership they secured.
With who is that again?
With Crypto.com Derivatives North America.
Yeah.
CDNA for short.
Gotcha, CDNA.
And crucially, this is a CFTC-registered exchange. That means it operates under U.S. regulatory oversight.
Okay. Why is that compliance piece the key nugget there?
Well, because it speaks volumes about their long-term plan, their intent.
Right.
In the U.S., prediction markets, they're a highly speculative area, often heavily regulated. So by partnering with the CFTC-registered entity, DJT signals this strategic commitment to compliance, to legitimacy.
Which sets them apart.
Instantly.
Yeah.
It sets them apart from maybe competitors trying to run an unregulated or, an offshore platform. And this potentially gives institutions who otherwise might not touch this sector a pathway towards engagement.
And we saw the market react immediately, didn't we? Shares rose, what was it, over 6% right after the announcement?
Yeah, for sure, a move.
So that confirms the market is maybe validating this pivot, viewing DJT less as like a traditional social media play reliant on ads.
Right.
And more as a potential social fintech disruptor.
That's definitely the vision they're selling. But let's also look at the quieter groundwork they laid to support this vision.
Okay.
If you look back to August 2025, the company reported its first quarter of positive operating cash flow since going public back in 2024.
First positive quarter. Now, were the numbers big?
No. The host numbers themselves are small. But achieving any positive operating cash flow is a key psychological step, towards perceived stability.
And it links directly to this digital asset strategy you mentioned.
Exactly. Their plan includes advancing the TruthFi and Truth Plus platforms,
right,
which are already rolling out some preliminary rewards using CRO, which is the native coin of the Crypto.com ecosystem.
Okay, so using crypto rewards.
Yeah. And they also detailed plans for that deeper partnership with Crypto.com to establish a digital asset treasury, specifically focused on acquiring CRO.
So it's not just about posting opinions anymore. It sounds like it's about monetizing that loyalty through digital rewards, financial services, all embedded right in the user experience.
Precisely. That's the idea. So if we connect this to the bigger picture, the upcoming drivers for the stock are almost entirely focused on executing this financial technology vision.
Right.
For the next 3 months, volatility is pretty much guaranteed because the stock price is trading on event speculation.
Which makes it, well, a fantastic target for short-term traders, right? Albeit a high-risk one, people who trade on events.
Absolutely. Event-driven traders love this kind of setup.
So let's look at the calendar then, because timing seems critical here. The next major test is November 12th, 2025. That's the Truth Predict US beta launch.
Mm-hmm. And user adoption metrics, early monetization data from that launch. That's going to be absolutely critical.
Yeah, it's so critical.
Because this is the first real data point. It's the proof point to see whether that highly concentrated, very loyal user base they talk about is actually willing to engage financially with this new prediction market vertical. If those user numbers lag, you could bet the stock will get punished instantly.
Okay. Then shortly after that, December 11, 2025, we get the Q3 earnings release.
Right. And the street, the analysts, they'll be looking for any signs that these fintech initiatives are starting to actually translate into revenue.
Even small revenue.
Yeah, if they could show even modest year-over-year revenue growth, especially showing some early impact from these new products, that could be a significant trigger for upside momentum going into the end of the year.
Okay, so those are the hard dates. What about the speculation side?
Well, beyond the confirmed dates, there's definitely significant market-driven speculation fueling momentum too. We're seeing chatter, rumors
Like what?
about anticipated institutional buys, and also ETF rebalancing cycles expected in December.
Ah, okay. So big money potentially moving in.
Potentially. When a stock this volatile, this liquid, gets pulled into institutional baskets, even just briefly for rebalancing, it can create a really sharp, sudden shift in buying liquidity.
Which traders will try to front run, presumably.
Exactly, they'll try to get ahead of it.
And what about that SPAC merger? I remember hearing about that. Yorkville Acquisition Corp.
Yeah, the Yorkville Acquisition Corp merger, that's still rumbling around. Finishing that merger is rumored to be the key to unlocking the full digital asset infrastructure they need.
For these bigger financial platforms.
Right.
Moving beyond beta.
Right. Taking it to the next level. If that merger finally closes, it removes a key structural hurdle for them.
Gotcha. Any other speculation?
Well, there's also higher level speculation, maybe more wishful thinking at this point, but rumors of DJT being added to major fintech ETFs.
Ooh, that would be big.
It would. And even potential talks with much larger exchanges like CME Group or Intercontinental Exchange for deeper prediction market integrations down the line.
When?
Now, these are just rumors, let's be clear. But in a stock driven so heavily by sentiment,
Yeah.
the perceived possibility matters immensely to that short-term trading narrative.
Okay, so we've definitely established a very compelling event-rich story driving the price, lots of potential catalysts. But now we have to introduce the necessary cold shower. The fundamentals.
The reality check.
This is where we hit that massive tension, isn't it? The vision versus the reality. That kind of defines this investment.
Exactly. This is where the risk really becomes crystal clear. The company currently carries a massive $4.48 billion market capitalization.
$4.48 billion. That's a huge valuation.
It is. Now, compare that, and this is the number you need to focus on. Compare that to the cold, hard number for their actual operations.
Okay.
They reported very modest revenue of just $3.72 million over the trailing 12 months.
Wait. Say that again. $4.48 billion market cap.
Yep.
And revenue of $3.72 million.
Million with an M.
Yes. Wow. How do we reconcile that? That valuation is literally, what, 1,200 times the annual revenue? Is this based on anything measurable now?
It's based entirely on speculation about the future, which just underscores how extremely early stage the company is and how limited its current monetization actually is.
Okay.
And we also have to stress DJT remains deeply unprofitable. They reported a net income of negative $108.61 million over the trailing 12 months.
$100 million loss?
Over $100 million, yeah. That single quarter of positive operating cash flow we mentioned, it's a nice milestone psychologically.
Right.
But it's really just a drop in the bucket compared to the sustained losses.
So investors are absolutely not buying a stable media company right now. They're buying an extremely high-risk growth thesis.
That's it.
One that's predicated entirely on successfully executing this social fintech pivot.
That's the core risk. Because the free cash flow is negative and the net losses keep piling up, the liquidity risk is elevated.
Meaning they could run out of cash?
Well, it means the company relies almost entirely on the equity markets, on investor sentiment, on the narrative, basically,
Right.
to fund its growth and operations. Not on recurring cash flows generated by the actual business.
Okay.
Now, on the plus side, debt is minimal. That offers some balance sheet flexibility. But the cash burn rate is definitely a significant concern that makes the stock inherently fragile.
And yet, despite those, frankly, terrible fundamentals right now, the valuation holds near $4.5 billion.
Yeah.
That suggests the competitive moat must be incredibly strong, or at least perceived to be. What sustains that price tag?
Well, the moat is unique. It's tied directly to political identity.
Okay.
The platform attracts a highly concentrated, incredibly loyal user base.
Yeah.
For that particular demographic and attention set, this is the place they gather.
And that brand strength, which is inherently linked to former President Donald Trump,
Yeah.
creates a specific, maybe non-replicable moat,
That's the argument.
which allows them to try things like charge premiums or attempt these aggressive monetization strategies that maybe a general social media platform couldn't get away with.
It's exactly why this prediction market strategy is potentially so brilliant if they can execute it.
How so?
They're betting that their users' deep, specific political engagement will translate directly into financial engagement.
Oh, okay.
They're essentially selling prediction opportunities to an audience that's already primed to care deeply about the outcomes. This could potentially monetize engagement much more aggressively than just simple display ads.
Right, that makes sense. Okay, let's turn to the technicals now. Using the most recent data we have from October 2025, where does the price actually sit, and what does the risk look like from a chart perspective?
Okay, so the current price is hovering around $15.99, which, as it happens, is near the 52-week low of $15.40.
Okay, near the low. What does that suggest?
Well, it suggests maybe recent investor exhaustion or some profit taking. But it also means potential buyers are looking at a price closer to the bottom end of the yearly range. Could be seen as a value area by some, maybe.
The critical number is volatility, right?
Always with this one.
Yeah.
The volatility is extreme.
How extreme?
The beta is 4.63.
4.63. Okay, put that into practical terms for, someone listening.
Okay, basically, if the overall stock market, say, the S&P 500 moves 1% on any given day, up or down,
Yeah.
you should probably prepare for DJT to move almost 5% in the same direction, maybe even more.
Wow. Okay, so definitely not a stock for the faint of heart or anyone seeking stable returns.
Absolutely not. This is a highly technical trade where timing the narrative, timing those events we talked about, is pretty much everything.
And that high volatility, coupled with the fact that investor sentiment, based on the Fear and Greed Index, is currently tilted toward fear, sitting at 39.
Right, which is pretty low.
That creates a classic setup, doesn't it? If the market's fearful while the stock is near its yearly low, it could set the stage for potentially massive reversals if any of those upcoming catalysts hit positively.
That's the potential contrarian play, yes. High fear, low price, potential positive catalyst incoming. It's a volatile mix.
Okay, so that brings us to the final investment thesis, kind of pulling together everything from the sources. We have to clearly distinguish between the opportunity for, say, short-term traders and the viability for long-term investors. Right?
Absolutely crucial distinction here.
Okay, so the bull case.
The bull case is tied almost entirely to that event-based speculation we discussed and successful product execution, specifically these new fintech platforms.
Right.
The upside potential is described in the sources as potentially outsized, meaning if Truth Predict really takes off, if they hit their adoption metrics in November and December, the gains could be rapid and significant.
But the risk factors
are equally powerful and arguably more tangible in the long term. You've got the persistent, massive net losses. You've got the incredibly low revenue that just doesn't support the current valuation on any traditional metric.
Okay.
You've got high headline risk. Anything political can swing this stock wildly. And there's the complete dependence on speculative capital, on that narrative holding up, rather than consistent operating income.
So synthesizing everything we've discussed, the huge vision, the short-term catalyst, but also the catastrophic fundamentals right now, what's the final verdict for our listener? Is it a buy now?
Well, based purely on the source analysis, this is classified as potentially an attractive opportunity for short-term traders, people specifically aiming to capitalize on the upcoming product launches and that institutional speculation over the next quarter.
Because they have clear dates and triggers to trade around.
Exactly. They have defined catalysts, however, and this is a big however. It remains a high-risk, speculative, long-term investment for anyone who cannot withstand extreme volatility and significant headline risk.
So for most investors,
for most typical long-term investors, that massive gap between the $4.48 billion valuation and the $3.7 million revenue makes this fundamentally a bet on the future, a bet on execution, not really an investment based on current financial stability.
Which means that push into prediction markets and digital assets, it suggests the company is essentially making this massive bet on its own user engagement and maybe the future of social fintech regulation. And that's a bet any potential investor has to be willing to make too, right, if they decide to buy in.
That sums it up perfectly. The key question for you, the listener, really is, are you buying a company with fundamentals you understand, or are you buying a speculation timeline hoping the narrative plays out?